Spain has become the fourth euro member and biggest euro economy so far to seek outside international aid. After weeks of growing concerns about Spain's bad loans and the health of its banking system, Spain finally sought aid in the form of up to 100 billion euros. Joining me now to discuss the latest on the Spanish bank bailout is Brussels-based senior economist at ING, Carsten Brzeski. Carsten, up until this point, Spanish Prime Minister Mariano Rajoy has completely denied the need for a bailout. He also insists it's not a bailout or rescue, it's just a loan. So what kind of reaction has the news of this bailout stoked, and what do you make of this Bailout Lite?
Obviously, it is a Bailout Lite. Yes, he's right that it is a loan, nothing more. I think the big difference here between Spain and countries like Greece, Ireland, and Portugal really is that the loan does not come with new strings attached in terms of structural measures and in terms of fiscal policy. Here, it's really a loan targeted for the Spanish banks. But it still is a Bailout Lite. Why? Because the money comes from the Eurozone bailout funds.
The 100 billion euros is bigger than most estimates of the needs of Spanish banks. Now, after 3 failed previous attempts over the years, do you think this amount of money will finally be enough to shore up its banking system?
Very hard to tell at this point in time. For the time being, the money should be enough, should be sufficient, but of course it will also be dependent on how the real estate market will develop in Spain, because we still expect Spanish house prices to drop further. And we then will need to see how the impact of a further price drop in the real estate sector will impact the Spanish banking system. For the time being, it should be sufficient to at least help them for a while.
Now the money is there, details are still murky and questions remain as to how they're going to use it, which lenders will require the funds and how much they will need. What is Spain's best chance of restoring confidence in its banking system?
Right now, I think with the decision over the weekend, they've already taken a huge step towards restoring confidence. We now are waiting for a report of external advisors and consultants to come up with the detailed needs of the Spanish banking sector. I think for the time being, there is nothing the government could do in addition to this. So right now, it will really be waiting. Then, how can you restore confidence? Is really to accept the bailout, to get it through as quickly and as smoothly as possible.
There's no doubt this may be viewed as a positive near-term development for Spain, but let's not forget it doesn't solve Spain's overall fiscal and macroeconomic challenges. Now, for Spanish bonds, against the backdrop of upcoming Greek elections, do you think they may be in for a rollercoaster ride again over the next few weeks?
Exactly. I think what we do see right now is that it is an attempt to again isolate Spanish bonds from developments in Greece. I think for the time being, we should see a positive impact on Spanish bonds because the government debt is much lower than in Greece. So I think really Spain has been taken out of the first line of fire right now. But yes, we will have to wait until the economy restores again. We will still have a long way to go for the Spanish government to restore fiscal sustainability and to reform the economy, which means that for the time being, Spain might be off the hook, but it's not the end of the Spanish adjustment story.
Since Mariano Rajoy and his government took office in December, they have implemented radical fiscal, labour market and financial sector reforms. As this aid is solely aimed at banks, do you think it's only a matter of time before Spain needs a sovereign bailout further down the line? And what about Spain's deficit target?
I think, of course, let's say Spain is already under supervision under this so-called excessive deficit procedure. So Europe is already closely following and watching the Spanish deficit. We already had first hints from the European Commission that the Spanish government will probably get an additional year to get its deficit under 3%, so not next year, but in 2014. So that's already an acknowledgement by the Commission, by the other European countries, that Spain is doing its homework. But due to the dire state of the economy, Spain simply needs more time. And possibility of a real sovereign bailout, right now I don't see it. The debt to GDP ratio in Spain is much lower than in most other Eurozone countries, and Spain is really implementing strong austerity measures, strong fiscal consolidation measures. So right now, I think there is no need for a sovereign bailout.
Carsten, thank you very much. It was great to get your opinion on the matter. So there we have it, Carsten Brzeski on Spanish banks. Now we'll have more coming up on Dukascopy TV throughout the rest of the day and later on in the week. But for the moment, goodbye.